What's a recession? A recession is a period of significant economic decline characterized by a contraction in economic activity, typically measured by a decline in gross domestic product or a prolonged period of negative economic growth. Back in the years between 1929 and 1933, the world went through a Great Depression in economic history, which is considered as the first recession. This was caused by a combination of factors including overproduction, excessive speculation, and credit crisis. We saw the same happen during the oil crisis between 1973 to 1975, early 1980s, and the global financial crisis in 2008, which was the biggest economic meltdown in the history. Now we might be in the COVID-19 recession, 2020 to present. Out of all these recessions, there was one thing common. We always got the biggest bull run in the market by the end of it. People who were able to manage their finances better or had the dry powder had an opportunity of lifetime as they were getting great deals at low price in stock market, real estate, or any other kind of investment opportunity. We are at a cusp of another such opportunity, and you wouldn't want to miss out if history repeats itself. In this episode of the FinTank, we will look into how you could save money and how we could create a recession-proof portfolio to prepare for the tough times. Hey everyone, welcome to the FinTank. Today, we're going to focus on an important topic of how you can manage your finances in a recession. With the current economic climate, many of us are facing tough times and uncertain future. But don't worry, in this video, I'm going to provide you with some tips and strategies that can help you navigate through these tough times. First thing you need to do is to take control of your finances, because that's the best way you could save up the money up front. Do not spend it, and you get to save it. Make a budget and stick to it. Try to cut out unnecessary expenses and focus on your priorities at least till the end of this year. You should also consider consolidating your debt. This can be done by paying upfront amounts if you have enough savings in the bank. And if you don't have savings, or if you are not able to pay that money upfront, try to call the bank and negotiate upfront. You could negotiate on interest rates, or you could also negotiate on the terms of the loan. Now, the best way to negotiate with a bank on a loan term or on interest rates is to firstly shop for it. You need to call multiple other banks and try to see what kind of interest rates they are providing versus your current bank. By doing this, you'll negotiate better terms or interest rate for yourself, and that will help you save a lot of money up front. And most likely, whenever you call a bank saying that you're getting better interest rates somewhere else and want to refinance it or move your account to that other bank, they come down and give you the exact same price you're asking for. And this will eventually help you a lot in the long term. Also, the other tip I would want to give you is to always opt for a fixed term interest rate. It shouldn't fluctuate with the market upturns or downturns, because if in case the government decides to lower the interest rates, currently they're pretty high, but in future if they discuss on lowering the interest rates, you could always refinance it and get a better deal. The next tip to navigate yourself through these tough times in recession is to stay informed. Keep an eye on the news and the market trends. Use online tools to monitor your accounts and investments. Also consider seeking advice of a financial advisor if you are really unsure of your financial options or don't know where to start your investment journey from. Third tip is to educate yourself. Read financial books, blogs, or subscribe to financial channels like the FinTank or anyone else you like to follow. The goal here is to make sure to keep you educated of what's happening in the market. The reason being, the more you know, the better equipped you will be to make informed financial decisions. The fourth tip is to be proactive. Don't wait until the last minute to make any changes to your portfolio or any financial decisions. And this applies to not only financial world but in any situation of your life. If you identify any potential problem, address it immediately and make adjustments to your budget or investments depending on how critical the problem or issue is. And always remember, it's never too late to start your investment journey. Finally, in our last segment, let's talk about strategies that will help you weather the storm. One strategy is to diversify your investment. I'm a huge fan of diversifying my portfolio because I don't want to keep all the eggs in one basket, because if that basket falls, all the eggs break, right? So having that kind of mindset will be helpful in this scenario, and diversify your portfolio so that you can never lose a dime in future. The key to the entire strategy is to invest smartly, and diversifying your portfolio is the start to it. Now, the best way to diversify your portfolio is to spread your money into different sectors and asset classes. Another strategy which I would recommend you do even before you start investing any money into stock market is to have an emergency fund. You can probably create a savings account or an FD where you can transfer some cash. It should generally be anywhere between your 6 to 12 months of mortgage or rent. This fund should purely be used for emergency situations such as loss of job or for someone sick in the family who do not have insurance. That's another thing which I would always recommend, is to have an health insurance for everyone in the family to avoid such unforeseen scenarios in future. This emergency fund will allow you not to take any credit card loans or any sort of loans in an emergency situation. In third and the last strategy, we will try to create a recession-proof portfolio. Now, I would like to leave a disclaimer here that the stocks I will suggest you is a study of how they performed in previous recessions and how they were able to beat the Sensex in the past. Saying that, there is no guarantee that they would perform the same way when this recession comes across, but it's always safe to invest in such stocks who have proven themselves in these tough times. So we will go back to our strategy of diversifying the portfolio. Number one sector I would invest in is FMCG, which is fast-moving consumer goods. Under this sector, I would invest in companies like Hindustan Unilever, Nestle India, and Procter & Gamble, as these are the companies that make products that people use no matter what the state of the economy is. The second industry I would invest in is the healthcare and pharmaceutical industry. Companies like Sun Pharmaceutical Limited and Dr. Reddy's Lab tend to perform well as people still require medicines and medical care during a recession. The third sector would be utilities. I would invest in companies like NTPC Limited and Power Grid Corporation of India. These companies provide essential services like electricity and power, which are always in demand even if there is a recession. The fourth industry is the telecom industry. I would invest in companies like Bharat Airtel and Reliance Jio Infocom Limited. These are the companies that provide essential communication services that will be used even if there is a recession. The fifth and the last industry is consumer durable industry. In this sector, I would invest in companies like Titan and Bajaj Electronics, as historically these stocks have done well during recession, as people prefer to invest in durable goods like appliances, electronics, and furniture that have long-term value. So these are the tips and strategies I would recommend if recession is supposed to happen. In conclusion, finances are difficult to manage, especially during a recession. With these tips and strategies, you can stay on top of your finances and weather the storm. Remember to stay informed, educate yourself, be proactive, and take control of your finances. And most importantly, use strategies that really work for you. Remember, recession is the biggest opportunity that you can get if you hold the dry powder, because it's going to give you unbelievable deals in any investment you make. Thank you for watching. Don't forget to like, share, and subscribe. This is D signing off from the FinTank.